You can sit those tables. The father of the jungle. And sit those tables.
Good morning, everybody. We'll get started here in about 3 minutes. Okay, we'll get started here in about 3 minutes. All right. Good morning. Happy Friday, everybody. Get ready for some exciting times here. I'd like to invite it, or excuse me, starting getting myself organized here. Welcome back to the Market Institution Live. It's an exciting session today. Going to be exciting. I think we're going to have some really great trading opportunities here. Not only are we going to dive into the markets and set up, get prepared to take some live trades and present some other trading opportunities, but we're also giving away three $25,000 static evaluation accounts, compliments of Elite Trader funding. And that's right, three lucky traders will walk away today with the chance to prove their skills in a real size funded by ETF, excuse me, Elite Trader funding. Now, before we jump into the charts, we'll go over how today's giveaway is going to be. A couple of rules here. This quiz is only to YouTube participants right now. So if you're watching from Zoom, you can still join us. Just hop over to the YouTube live chat and answer the questions there. Team, can you post that in our Zoom session, the link for that? If you've won in the last 30 days, please sit this one out and cheer on for the other ones. Help them out. We'll do three quiz questions, and the first person to answer each one correctly in the YouTube chat wins a $25,000 Elite Trader funding evaluation account. And we'll announce the winners during the session, so stay tuned. Don't go anywhere. So, all right, thank you, team. All right, well, a couple of sources out there said that the CPI data was going to be delayed, but I guess it came out. I guess because it was last month's numbers and the government was still open last month. Just kind of goes to prove that the dissemination of information, people aren't really aware of that. Now, next month, well, let's see, yeah, next month's CPI might be a little different, okay? But anyways, we got a big reaction on that. Indexes, S&P, NASDAQ, Russell, and the Dow were trading outside the prior session's range. But the Dow 30 stocks continue to trade on light pre-market volume. Okay. That's why we saw the big jump up in price, because the lack of buyers and sellers, not that there was more buyers and sellers. Okay. And the light volume is one of the things we check. And usually that light volume is a good indication we're going to see some of that whipsaw price action or very quick price moves. Oh, okay. Thank you, Liz. Yeah, one of the resources I checked, it did say delayed by it. So um, I did see it come out on some of the other financial places that they were going to release it, but it was kind of a toss-up until it actually happened. Um, anyways, some economic delayed by the government shutdown still. ES and NQ back at all-time highs as Russell and the Dow catch up, and I think they did catch up off of that. Now, earnings have been mixed this last week, a couple with bullish and a couple bearish. We saw that the market really didn't give us some huge swings off of the bearish or the missed earnings, which was really kind of strange. Usually we get a much more dramatic reaction from those. Let's see. We still have over the next 3 weeks where we get about 400 of the S&P 500 companies are still going to be announcing earnings. Not all of them over the next 3 weeks, but a large chunk of earnings will be released over the next 3 weeks still. Okay. In early pre-market, the trend was trading up higher at 2 and currently back down about 1.65. When we get those high readings on the trend, we often see that there's more bullish sentiment. Now, the pre-market on the VIX was also unchanged. Now let's just double check that now. Yeah, right now it's down a little bit. Okay. When we have low readings in the pre-market trend, or sorry, in the pre-market VIX, that can lead to more bullish. So if we have a high reading on the trend, a low reading on the VIX, usually those are some bullish sentiment going on. I also want to point out that when you're looking at the tick, the NYSE tick, the markets have only had throughout the session some narrow ranges where we've seen sell programs or buy programs kick in. Okay. Not very long during the trading session. Okay. So throughout the trading session, once you start seeing the tick, which is the NYSE or the NASDAQ composite, these are not based off indexes. They're based off of the composite New York Stock Exchange and the NASDAQ exchange. Okay. So when you start seeing some upward momentum or downward momentum, you'll see that the markets will hold the extreme areas. Okay. And it'll spend a considerable amount of time down there. Okay. So it's something that you can observe, pay close attention to, especially if you're looking to stay with the overall trend. Okay. All right, let's see what else do I want to touch on here. Let's see, nat gas is already rolled out to the November contract. We got last trade date coming up on October 29th. Crude oil has also moved up over $6 since last trade. Well, actually, it was the day before last trade date when we saw the bottom put in. Okay. Also, crude oil pushing back above the 200 and well, over the 50 and the 200 simple moving average. Okay. So very strong move up here on a daily chart. Now, we had the death cross that we were watching for. Now, if price does continue back up, we'll be looking at a golden cross. Okay. And those golden crosses and the death crosses, they tend to lead to, a few days of the market trending in that direction. Okay. So daily charts, larger time frames on these should also be observed, just so we know what the other traders are looking at. Okay. We did have a fair value gap back up around that 62.21. If price starts to come down through this dead space here, we should look for the other side. A nice little pullback would be welcomed on if you think crude oil is going to continue to be bullish. Okay. So in setting this trade up, okay, I'm going to set up the crude oil. We have a small risk on the trade. I'm looking for price to come back up 62.21 and then proceed to go lower. Okay, so I'm going to set this trade up. I'm keeping my contract size small. And 62.21. Let's come up here. We're going to sell 2 micro contracts there. And we'll come up right into that area about, actually give it a little bit more wiggle room here. About 62.45. Which will be less than $100 risk on the trade. Okay. As soon as I get my computer to work here. There we go. So the trade is set up, looking to sell short. as price retests that area. Okay. Uh, I'm not quite convinced that, well, it depends on the time frame you're looking at. Okay. See, if you're looking at the daily chart, and the question was, and nice to see you, candlestick shenanigans. Um, if you're looking at the daily chart, we have made lower highs, lower lows, and not yet taken out, or maybe tested it, that last high, but we haven't closed above it. Okay. So daily chart still showing that market structure is to the downside, but shorter term, we're seeing that the last few days since last trade date have been pretty strong to the upside. Okay. So depending on the time frame you're looking at for the position, okay, um, well, the position you're looking at, uh, you could determine whether that risk is within your trade plan or outside of it. So short term, yes, it's a counter trend trade. Longer term, it's kind of at a decision point right now. If price closes above this last little swing high, then we'll look for a pullback as well to splice in and potentially see the trend change. Okay. So after this strong move up, people might be looking for a pullback. Okay. Let's see. Earlier this week, also President Trump said they're going to start buying a million barrels of oil to fill up our strategic reserves, get them back up to par. So that might be part of it. There was also some news about Russia and increasing prices of their oil products as well. Okay. So a lot of news that you guys can go out and look at and research. This purely based off a technical pattern. We got a little fair value gap at the origin of a drop. So I'm looking for that potential short trade. 62.21 selling short, and about 62.45 is my stop loss. Natural gas. Okay. Natural gas has had a pretty significant move down, probably just a short-term bounce as it continues. Well, we made a lower high, but not a lower low on a 1,000 tick. The daily chart also just showing a pullback. Looks like about a 38 to 50% pullback on that. And looks like we might be looking to consolidate a little bit and then make a decision either going lower or going higher. Right now, natural gas, when we look at the daily ATR and we compare the Globex range, we see that we're right about the middle. And usually that can lead to a more choppier um, session open for natural gas. Okay, so I'm kind of holding off on trading natural gas, and the reason why the Globex range compared to the daily ATR, we have documented many times that the price tends to chop a little bit sideways here. Okay. All right. Let's see. Crude oil. We got gold. Yeah, gold just shot right. Beautiful move on gold. Yeah, one of the reasons I did report that is that one of the resources, the economic calendar, that it did say it was delayed. Okay, so always check two or three different resources. Okay. Uh, let's see. All right, looks like gold has been consolidating for the last couple of days, building potentially some fresh accumulation of orders. Looking to splice into that trade, I would need a pullback back down to that 4,090 in order to splice into that. Okay. Right now, it's building that accumulation. We'll look to use as momentum starts to pick up, potentially. We'll look to splice into that. Okay. But right now, we're kind of on the waiting side. Our exchange traded funds, IWM, okay, gapping up $3.42. QQQ's all-time new high again, gapping up in the direction of that trend. This is potentially a exhaustion gap. Okay, so that doesn't mean the market's going to reverse today. Okay, it just means it's an exhaustion gap. Okay, so I don't want you to misinterpret that, because you can see there was an exhaustion gap right around in this area here, and price continued to move up. Okay, the exhaustion gaps are just basically a sign on the price chart to play a little more defensive. Okay, doesn't necessarily mean a trend change at that moment. Diamonds also gapping up, uh, testing the all-time high, and yes, spiders in the queues in the lead there. All right, so let's see what we've got going on. Part of the reason I'm looking for the pullback is over the last couple of sessions, we have studied a few things that we've talked about using a map from Richard Wyckoff and then also just kind of seeing how these patterns tend to set up. Okay. So what I'm looking at over here, and we started this out last week, okay, by recognizing the market going sideways. Throughout some of our sessions, we've talked about, taking into consideration what price did during the Asian London session to help us anticipate what will happen in the New York session. Okay, we've seen that basically most of the Asian session, most of the London session was sideways in this. So we were anticipating either a move up and then down, which would have been a reversal. What we got was a move down first and a move back up, a trend continuation. Okay. Now remember, the trend continuation still needs that pullback. And being at that oh, okay, I'll come into that in just a moment. Good morning, Harvey. Okay. Excuse me. The pullback here has to be considered because this whole range as we go forward, okay, either the pullback is going to be a shallow one or it's going to have to go deeper. No trades to be taken inside what we call is the dead space. Okay. Let's go ahead and take these out. They've all been tested. Those were Fibonacci price extensions where we were looking for that price to pull up. Okay. Okay, I think I've already, let's go on to the NQ. All right, let's reset our Globex high. NQ also had that similar pattern. And we have seen the price has jumped up into our Fibonacci areas, okay? Our projected areas. I'll just remove that data. Coming back to the map right here. Okay. We're now looking at, that's not the right one. There we go. We're looking at the trend continuation. Now, where we're looking for buyers should not be within this range here. This range is, most of the orders have been filled in this range, okay? So we get a high retracement, trend continuation. We pull back into deeper below this range and find the more strong buyers, okay? So I am expecting a pullback. It may take a day or two for that pullback to occur. And I'm looking for, currently right now, this is a demand zone just above what we call the dead space right there, okay? So if we start to look at how we're going to participate in a potential short trade, we're going to have to resort to a lower time frame. Okay, so let's bring up the NQ. Okay. I've already taken a couple of micros anticipating the pullback. What we're watching for, and I'm going to step aside on this one, could probably going to get
Order filled.
oh, thank you, Kenneth. What we're going to look for is that price turn out of this area. So we're looking for price to give us a signal that there, even if there's a fair value gap in play. Right now on the tick chart, there is not. Okay. 15-minute chart. And let's just drop this down a little bit further. Drop down to the 5-minute. Yeah, no setup on this yet. Yeah, the reason I took the trade earlier is we did have that a really small fair value gap in there. And I was hoping we'd pull back a little sooner, but that wasn't the case. Okay, so we're still waiting for the turn to prove itself, and then we'll look for that pullback back down to the demand area. One thing that we can watch though is as the market did move up in price, Goldman Sachs is up $6 on 4,800 shares traded. Okay. Remember, futures are derivatives. They follow the cash market. Now, this is pretty significant light volume. Okay. NVIDIA has only got 3.5 million shares traded on it. And NVIDIA has kind of been one of the eye catchers right there. As you watch that pre-market volume with the price move we just saw in the equity indexes, you would anticipate if NVIDIA was going to continue in that upward move, that this would be about 7 or 8 million shares traded on it already. Okay. But we're seeing that the volume on the Dow 30 stocks is still very light. We're 8 minutes away from market open. Okay. So things are going to get a little volatile when futures realign with the cash market. Okay. Volume is also always to be considered when the market is gapping up strongly. And we can see the S&P December contract only has 187,000 contracts traded on it this morning. Now, assuming that all the numbers are right, okay, that's very, very light volume for the Dow, the futures product with a big price move like this. So possibly another little squeeze to the upside. Everybody that tried to take the short earlier, okay, and we'll wait for that pullback. But this is really significant. Now, volume will change a lot once the market opens, okay, in about 7 minutes. But right now, this is very light volume. And when we have light volume, and this has been happening over the last several sessions, very light volume, okay, going into the open, futures and cash get pretty volatile, okay, when they start aligning and traders start taking positions. Okay. So let's keep it safe. We're going to have some really good trades today, but we need to wait for those to manifest and set up at this point. Dow also shot up as we're looking at that, shot up into a sell territory. We did have a zone up here, okay, with the fast move, it kind of swept through it. So we'll just say it's done at that point. dropping down to the smaller time frame. Yeah, we need to wait for the turn. Right now, all indications are leading that price is going to continue up. Okay, but on the light volume, we have to anticipate some of that whipsaw to take place. Okay. Russell also jumped up into our prep screen zone area. Of course, with the light volume, it swept through a lot of those price points. Okay, dropping down to the smaller time frame. Didn't have this one set up yet. Okay, keep in mind if price does start coming back down, we should easily sweep through this area, which we call the dead space. Okay, and as we see the larger picture, and we can see this has just been a one big range. Okay. Now, nothing has changed on the front of in front of the China meeting. Okay, as far as what China is looking to do to set up some trade deals. And China is a very strong, as Trump puts it, a tough negotiator. Okay, so we'll see who takes the lead off of that. Again, we're going to be waiting a little bit at the open on the equity indexes to get a good high probability entry. Because the profit potential, once we get our entry, the profit potential will be back below this range here where all the orders have been filled. Okay. So we'll have the opportunity to sit in it for a period of time. Even taking just a couple micros can net you out a pretty good results. Okay. The crude oil, that gas, gold. All right, we got a couple minutes before the market opens. Let's do our first quiz question and just reiterate on the rules. This is for our $25,000 evaluation account. We're going to be giving away compliments of Elite Trader funding. This quiz is open to the YouTube participants. Okay, so if you're watching on YouTube, you can still, if you're watching on Zoom, you can switch over to the YouTube and you can participate. Okay, in our live chat there. If you've already won in the last 30 days, just please sit this one out and cheer on everybody else. Okay. So our first quiz question for the $25,000 evaluation account. Okay. This one's a pretty easy one. I think you'll get it. Okay. What type of financial instrument does the market institution primarily focus on when teaching? A retirement planning position, A, real estate and mortgages, or C, stocks, futures, commodities, and currencies. So the first one to answer in our YouTube chat, the team will reach out to you and get you that. Okay. Thank you, team, for putting all that together. All right. Let's see. Market's about to open. Yeah, one of the things we've been utilizing the CRT candle range theory. We have a 120-minute chart. Roger got it. All right. Good to see you, Roger. Hopefully by the end of the year, I'll be back towards Singapore and heading over to Indonesia. So once I'm over there, I'd love to hook up with you. Good to see you, Roger. Let's see, on our candle range theory, what would have to take place is price to trade above each one of these 120-minute candles. Okay, we got 30 minutes left to complete this candle. Okay, so price going up to find some sell side liquidity on here okay, would be much welcomed, and then price closing back inside that candle range. Okay. Not every day the candle range theory works. You got to change the time frame to find the right picture so you can align the time frames that are going to produce the best results for you. Looking at the equity indexes, in order to get a chance at a short entry, we'd like to see a strong price movement down, leaving us a fair value gap range. Okay. Looks like NASDAQ. No, NASDAQ's got a small one. Let's see. But don't be too quick to jump in. Anybody that was short last night is going to be getting a margin call. And often when that panic sets in, prices will jump to the upside. So we're going to give the market just a few minutes to set up. For those that are that have been watching and utilizing the open range breakout for the NQ and the S&P, we still have a few minutes to wait for that to set it up. All right, I'm going to stop sharing my video. My computer's slowing down just a little bit. Okay, so with the open range breakout on the NASDAQ, you're looking at a 0.5 to 1, 1 to 1, and a 1.5 to 1. Those are what the lines are to the upside or downside. Okay. S&P. Same scenario. Just going to be waiting for that first 15-minute candle to complete. Not bearish, not bullish at this point. We're just kind of waiting. Now there may be some further detail on the smaller time frame and possibly a tick chart. And throughout the trading session, if I see that the time-based charts are really not giving any signals or the zones I'm looking to use are pretty far away, then I'll drop down to a tick chart and see what I can see inside of it if there's any opportunities. Okay. So my preferred preference is about a 2000 tick chart. That keeps me within my trade plan and parameters that I like to use for my intraday trading. Now, any trader, you can use any time frame, or tick frame, but just find one that works for your trade plan. Okay. All right, crude oil. Let's see. We're still waiting on that one. Yep, there it is. Just a little confirmation. Okay. On the nat gas, looking at the daily ATR, about 16 cents. Globex range was 8 cents. Globex range is in the middle between that 40 and 70% of the daily ATR. Often the opening of that is very choppy. Okay. When the Globex range is narrow or wide, there are better trading opportunities. Wide, meaning that the ATR or the Globex range compared to the daily ATR is greater than 70%. And a narrow range would be that the Globex range is 40% or less compared to the daily ATR. Okay. These are pretty good conditions to help us understand when the better trading opportunities may come in. Okay, noticing a lot of buy orders kicking in or upticks on the tick. A lot of advancing issues over declining issues. The VIX is trading lower. and the trend has now opened up in the consolidation area. So all of these are indicating that the market is feeling pretty bullish at the moment. And with that bullish sentiment, we don't want to just jump in and go long at the high of the day. We want to wait for either a pullback or that potential sentiment change here. Okay. So I am expecting a pullback. Sometimes we refer to it as the kind of a gap and crap. But we need to see that signal in order for us to get in. Apple, Nvidia, all-time high on the S&P. Wow, look at that volume. Goldman Sachs up $11 on 100,000 shares traded. Something just doesn't feel right. American Express up $4.60 on 100,000 shares traded. Where are the big players? If the big players are not there to hold price up, this thing will be coming back down. Okay, but that doesn't mean we're going to short it now. We're going to be watching on the smaller time frame to be able to participate. What we should expect is if market starts to make new highs, is that it's going to be more of a short squeeze than a bullish move. Okay, now everybody's looking at the P&L of the stocks right now, showing, man, everything's gapping up. They're getting the FOMOs. Okay, we have no signal, even on the smallest time frames that we monitor, for a short trade. Okay, and in all likes right now, it appears we're going to have a little bit of a squeeze, and we need to wait for that opportunity where we have a down move and we at least create a fair value gap to show price moving down. But due to the light volume, my speculation is price taken out to high, where some stops might be, and looking for that sell side liquidity up there, where the banks and institution will start to take advantage of the high prices. Okay. My main thought behind a lot of that is that, hey, you know what? Volume is not there. Now, futures are showing very strong move. When we come back out and compare the S&P futures to the cash market, we have 16 Dow stocks up and one down. That's 15. Okay. 15 net. We take 15, multiply it by 2. Since the Dow is a price weighted index, we can compare that. 2 times 15 would be 30. Cash equals positive 30, but S&P futures are trading at positive 56. S&P futures are overbought, trading at a high premium relative to the cash market. Okay. That doesn't mean we have a trade yet. It just means futures are way overbought relative to cash. Okay. So how does that make you feel? Well, does it make you feel like you want to go long or wait for the setup and then cash and futures to balance out? Okay. A lot of information that we share throughout our sessions to help us get a better understanding of the price movement, when to be a buyer, when to be a seller, when to be defensive, when to be aggressive. Yeah, government's still shut down. I did double check that this morning. It looks like every day they have a vote. Okay. But right now it's they're still shut down. There also has been some rumors about how around big insurance companies like United Healthcare and things like that, and a lot of the big names are the ones that are funding a lot of this shutdown. So let's just keep an eye on some of that. I also saw a clip that needs to be verified, okay, about some things that the media is starting to talk about. Larry Ellison, Oracle, and that his partner wife was also part of the well, I'm not going to spread the rumors, but you can just go and search it. Okay. I don't know if it's true or not. I don't really have a better way to verify it other than just looking at things. But if that is true, then we're going to see some shakeup with the stock and with some of the projects that they're doing. Okay. Just play defensive, but go out and search some of that information, and you make your own choice on how you want to participate. All right, so we got 15-minute chart on gold. We have a fair value gap down below, and we have one if the momentum is going to continue up. We'll have an opportunity to splice into gold somewhere in this range here. Now, this is a wide range, and if I took the trade at the proximal at 41.22, I would have to place my protective stop loss a little further away than what I'm comfortable with. Part of understanding these techniques is saying, you know what, if I enter at 41.22, am I willing to give it 44 points risk? Probably go, heck no. Yeah. Um, wow, those are some tough questions. Will the debt ceiling have to increase? What will that affect the market? Ooh, I don't have a good answer for that. Okay. If the debt ceiling is increased, that means more printing of US notes. Okay. Um, Taking a quick look out at what the US dollar is doing, how the 10-year and the 2-year yield are doing. Okay. Right now they're correlated. Okay. But the 10-year yield has been below 4% pretty much all week. Okay. And the 2 years at 3.4%, almost 3.5. Okay. So we could be leaning towards, especially watching the 10-year coming back below what the 2 years, and that would be what they call as an inverted yield curve. Okay. So I don't have a good answer for that. I don't think they're going to look to increase the debt ceiling. Okay. When they're trying to get all the stuff out. Yeah, the market knows. Thanks, Liz. The market knows Washington is dysfunctional, so I doubt any increase in debt ceiling will play much of a role in what that does. Well said. If anything, with all the cuts, things should be the debt ceiling should be getting lower. But on the US debt clock, I think we did pass the third. Let's double check. Woo, yep. We did pass 38 trillion. Okay. That's what we all need right now. More debt, more debt. All right, we're still waiting for any type of signal on the small time frame that traders are getting exhausted. We're not seeing that yet. We're still seeing markets pushing up higher. Now, I'm not a willing buyer at this point to go long, but we're not going to pick a top until we see that there is significant evidence that we should be looking to take the trade short. Okay. Let's see, come back out here, a little higher time frame. Earlier in the week, we started talking about how price interacts with a demand zone or lake-based zone, and watching how it turns out of that area using some other techniques like fair value gap as price turns out. So if you're drawing your supply and demand zones off of a larger time frame, you can reduce to a smaller time frame and then watch how price starts to turn out of there. Also, I'd recommend that you go back and find 100 picture perfect past trade setups and then look at the turn out of your zone. Okay. Study the how price starts to reverse out of these zones. Okay. There's a couple of different places you can get in. Some are a little bit more risky, or waiting for these additional confirmations may alleviate some of that risk. All right. So let's look at some of our other candidates here. Based on the CPI report, we did get some pretty good reaction off of the CPI data, especially around the dollar and FX markets. Okay. The dollar and FX markets have simmered down a little bit. After that, came close on the Swiss franc for the opportunity to go long. Okay. Canadian dollar went right up and hit that level, came out of it. Now, I wasn't there to take the trade because I got distracted looking at the indexes rather than setting these trades up ahead of time. And we're still waiting for, looks like crude oil might be getting close. Yeah. Crude oil creeping up, 62.21 is our entry for a short. We also want to recognize that right now the daily chart on crude oil is in between the 50 and the 200. A close above the 200 simple moving average would give people some bullish signals. Not an entry, but that things are looking a little bit more bullish. Okay. All right. Diamonds pushing a new high. Let's see what we got on. Yeah, still no sign of weakness, even on the small time frames here. Now comes the short squeeze, pushing prices higher. Okay, so now we also have the, where are we at there? Looks like we're just waiting on the Russell to make its all-time high. Okay, so Diamond pushing, making a new all-time high, Qs and SPY. Let's see what we have going on the Russell here. Keep in mind, still no indication of going short on these indexes yet. So as price arrives at one of our prep screen zones, we want to see how price turns out of this area. Just like I was mentioning before, just the opposite. Once price hits our large time frame zone, how is it turning out? Okay. So we still don't have any evidence of going short yet. But being that the volume is so light on the stocks, extraordinary light right now for the price movement, okay, this market may not be sustained to the upside with this lighter volume, okay? So we want to be watching on the small time frames for any indication. The first move may be big. Oh, there we go. S&P is starting to come in. Now we want to take a small enough position size to where we can hold on to this trade. Okay, right now I just marked an area to which would be the fair value gap. One or two micros would be perfectly okay. And then we can find other places to add on a little bit later. Okay, so the S&P can be a little more aggressive to jump in. Dow's still climbing, Russell's still in that range. Okay, 2000 tick. I'm going to set this trade up on the S&P. I'm going to start off with two micros. Okay, you trade based off of your trading plan. Okay, and whatever your risk is per your trading account. This is a counter trend trade, and it's highly possible that we're going to get stopped out on this. Now, your stop loss, if you're using that proximal line as an entry, we'll look at the stop loss up there about 68.34. Okay. Now I'm getting in way late. No, not going to get too jumpy. We've got 10 minutes before. Oh, I really wanted that. Almost pushed the button. We're already planning the trade. Now, if we get back up 68.28, 68.29. Okay. And let's jump over to the NQ. Marking that area as my risk. NQ 25,497. Stop loss initially will be 532. Now, with the potential move back lower, one or two contracts and giving yourself that wider stop. Okay, you don't have to load the boat. We potentially have a good size pullback. Okay, so S&P hit. Using 2 micros, our stop loss. 34. Yeah, right now with 2 micros, we got about $62 risk. Now I want to hold on to this until price comes way back down. And I'm just going down to look where we might have buyers. S&P would be 34. All right, so while we're waiting for things to play out here, we have our risk in place, our trade in place, our risk on the trade here with 2 micros, about 62 bucks. If you were trading 2 minis, that would be about 620 bucks. Okay, just multiply it by 10. And as we look down and left, what we're looking for is where do we have demand? And it is significantly lower once we get that picture of where things are at. We have that buy territory. So I'm going to target that range down to about 67.50. Pretty far away. And I don't see really any other place that would be. We could probably got a couple of speed bumps along the way there. Now remember, every trade has risk. If you choose to participate in this one, make sure you know what your risk is. And is that risk within your trading plan? If this starts momentum to move to the lower side or down, okay, we'll have other opportunities to add on to that. Okay, I think we just got filled on the NQ as well. Okay, we got 2 micros on the NQ. And let's just come up here and get a good idea where our stop loss is at. Okay, so we have $151 risk on the 2 micros on the NQ. Okay, we've got now I'm not sure if the economic reports that are coming out that are scheduled. Okay, we had PMI composite, which was 945. Got new home sales, consumer sentiment that are scheduled. I don't know if these are going to be delayed or not. Okay. So you could wait till after the 10 o'clock and then find your way in. Okay. We might see some additional volatility around that time. Taking a look at the large market cap stocks. Apple's flat. Broadcom still trading up. The economic report in 2 minutes. Now, since futures are a derivative instrument, meaning futures follow the cash market. The cash market is our stocks. The NASDAQ index or NASDAQ futures, okay, and then index, NASDAQ 100 is a market capitalization weighted index, showing that the larger market cap stocks will move the market more than the smaller ones. Yeah, Jens, when you find that fair value gap inside of our leg base, it's a pretty good opportunity. But you don't have to jump in right away. You can wait for price to come into the zone, the leg base zone that we talk about, and watch for the turn out of there. They're very good quality zones. Okay, crude oil almost back up there. Natural gas actually showing a little bit bigger movement than I anticipated. Gold's holding the fair value gap. So we'll see shortly how those will play out. Now, if we are stopped out, we'll look for the next opportunity. And the next opportunity will have basically the same picture. We'll have a strong move down. We'll look for a fair value gap, price to bounce back up into it. And what we'll do going forward is if the market does start to pull back and gain some momentum to the downside, is we'll add on one micro contract at a time using a fair value gap as an entry. Where's our 10 o'clock reversal, huh? Oh, going back green. I agree. And that does correlate with some of the bigger picture that we were talking about. We'll come back and find it here. Is as we're anticipating the trend continuation, you can see by our diagram we had the base and price moved down first, then moved up. And that's what we see, part 1 and 2. So what would be a continuation would be if we visualize that picture, price coming back down to demand, making that higher low, we would see that trend continuation. What we're looking for in a small time frame is the move down to that. And that's what we're trying to participate in right now. Okay. Now, mainly I'm trying to participate in that because the volume is extraordinarily light for prices being up this high. Now, that doesn't mean my trade is going to be successful. It's just that I'm willing to take the risk on a counter trend trade at this point. Okay. Ultimately, if the trend is going to continue, we have two places. Okay. Two places it could turn up, making a higher low above the dead space, or having to go back below the dead space and then making that move up. Okay. Right now we're taking the risk for that potential retracement in order to splice in to a continued up move. Okay. Are we doing on crude? Are we getting close? Now, crude oil, basically the same thing. We have an entry at 62.21. We'll identify our stop loss, that range. All right. So while we're waiting, man, that's
Order
choppy.
filled.
What did we get into? Oh, we just got crude oil. Okay. Crude oil. Our stop loss is in place. We have $48 risk. We're trading 2 micros. Okay. The reason I only took 2 micros and not load the boat, is because we're going against the trend. Okay. Well, at least the small time frame trend. If price should start to move down, we should take out this what we call dead space area. So the probability of a good price movement back down to our demand
Order filled.
is very high probability. Oh, we got stopped out on the S&P and stopped out on the NQ. So they're running some stops. Looking for that sell side liquidity. Now we're just waiting for the next potential entry. I don't have an entry to go short until I get some evidence. Right now, we could continue to push higher, okay, and just keep running stops. Okay. That seems to be what the market is doing right now. Let's go out to our little larger time. Yep, there we go. Okay, so we got high time frame, 100 or 2-hour chart. I'm just marking the high and low. And this is a concept that several traders have been utilizing. Is called the candle range theory, okay, CRT. And what we would need to see if we're using this big expanded range candle, if we're using that as our candle number 1, then we need to see candle number 2 close inside in order to get the higher time frame confirmation that will look to get a price moving down. We're still looking at a little bit of time as the market figures out what it wants to do. Okay. Let's come take the Russell. Yeah, small time frames still not showing an entry short. Nor is Dow. So all I'm doing now is just finding different reference points to where potential trade setups can come into play. But we're not going to try to pick tops. We're going to let things set up. No setup, no trade. Looks like the Dow and the Russell are kind of behind this push up. Crude oil. And all right, we're in crude. Keep in mind, we do have $48 worth of risk on the trade, 2 micros. And we're looking for price to come back down through this area. All right, so while we're waiting for things to set up, I'll come back to our indexes and we'll be patiently here. Let's do another quiz question and give away another $25,000 evaluation account, compliments of Elite Trader funding. Okay, you guys ready in the YouTube chat? Are you ready? The first one to answer is going to get the evaluation account, pass the evaluation account, and start getting some money from the Elite Trader funding group. All right, question number 2. According to our YouTube channel description, what is one promise the market institution makes to its audience? A, to guarantee 100% profit on every trade? Not. To help traders discover picture-perfect setups to transform their trading journey? C, to teach only long-term buy and hold investing? So in our YouTube description, what's the one promise the market institution makes to its audience? Guarantee 100% profit on every trade? A, or B, to help traders discover picture-perfect trade setups? Or to teach long-term buy and hold investing? So be the first to answer that question, and the team will reach out to you. All right. Now, a tick chart is what I'm using on all of these to try to find the earliest turning point. Okay. A tick chart will be something that we can watch to see a very fast movement, a lot of contracts traded. Okay. A tick chart represents number of transactions. Okay. It's not bound by time. The time-based charts may take a little longer to form because it takes a lot more time. Okay. All right. So this is why I'm watching on the tick charts to see an earlier turn. The market is strong today. Oh, look at that one. Of course, I chickened out because the risk was outside my trade plan. I guess that's not being chicken. It's just it didn't fit my trade plan. Too much risk on the trade, even with 1 micro. So I elected not to take the trade, but you can see the technique works quite well on that. Yeah, there are some trades that that play out beautifully, but the risk is outside my parameters for my trade plan. All right, what else do we got going on here? What's getting close? Nat gas. Yes, very small time frames have no indication of market turning yet. All right, YouTube channels. Anybody take that, want to get that $25,000 Elite Trader funding account? Let me repeat the question there. Of course, all you have to do is look at the YouTube page there. According to our YouTube channel description, what is one promise the market institution makes to its audience? A, to guarantee 100% profit. B, to help traders discover picture perfect setups to transform their trading journey. And C, to teach only long-term buy and hold. Yeah, if you highly recommend having one or two prop accounts in your back pocket for when we're in market conditions that are not really great, where you can test out a couple of your strategies. Also use it for an additional source of income. Pass the evaluation, you get set up. All right, looks like we're starting to get a little price movement on the, I think I'll give the S&P another shot. Come on, charts, hurry up, load up. There we go. Now you could go out to a little larger tick size if you choose. Let's come back over here. We got S&P setting up first. Remember, assess your risk. Coming in a little bit late on this one.
Order filled.
Stop loss, 35. Nothing yet on the MQ. Just getting little moves out of these areas. Nothing really big yet. Crude oil working out nicely. We're looking to look for some momentum to push through this range. And we're looking at a target range, about $60.78. We'll look for a bounce at that point. Heating oil is often a lead indication. Heating oil tends to move a little bit earlier and before crude oil does. Just a little nugget right there. On our crude oil trade, we have $48 risk on 2 micros. And we basically made a 1-to-1 trade on that already. Okay, S&P underway. NASDAQ still trying to set up. But I can plot out where my stop loss will go. 25,551. And we're waiting for even the smallest crack that we're going to come back down. Stocks are not noticeably dropping in price. They're still holding the upper range. But always keep in mind that between 8 a.m. and 11 a.m. Eastern, that's when the banks and institutions are completing their order flow. Okay. Between 8 a.m. and 11 a.m., banks and institutions complete their order flow. Now on my Bitcoin, micro Bitcoin, I am looking for price to come up. We see we have a wide open space up here. They're called the dead space. I anticipate price to move through that area. I just have 3 micros, and micro Bitcoin futures have a very low overnight margin rate and an intraday margin rate with this particular broker. So, and we took some of these other moves that were really nice, nice profits over the last couple of days. Still some small moves here. All right, so Tesla leading the way down. But Tesla's all by itself. Beautiful move. That's a nice setup on a fair value gap. Okay, it looks like the markets have quieted down pretty dramatically here. The tick is now back in just kind of a oscillation mode. We're seeing the trend pull back, not yet on the sell side of things. And we see that the markets are very, very complacent as far as the volatility index goes. Oh, hey, Russell's setting up on a 5-minute chart. That's good. to be a counter trend trade. And you can see that we have the potential right now that that fair value gap is being manufactured on the time-based chart, which will pique a lot of people's attention. Notice the IWM, okay, the picture of that, because that's what moves the Russell futures. So in recognizing my entry is going to be at 25,034.30. Stop loss 25,040, but 2,540. Dow, nothing to be done on the Dow yet. In Q on a 5-minute chart is also created one. Well, almost. We still got 3 minutes left to form that candle. Looks like they're trying to hold it up above that. Now, after we complete our session here in the live trading room, I will be going over to our Discord channel. We do have a voice channel over there that we can chit chat back and forth, share recipes, adventures, all that fun stuff. Trader Talk. And coffee, Kelly says. Yeah, we do have that Cali indicator. When Cali goes to get coffee, the market moves. So still very choppy. Keep your position size small. Okay. We're taking a crack at the high. So you don't want to go with when you're going against the trend, keep your position size smaller. Understand that and also acknowledge your risk by, for me, I say it out loud. I'm risking $50 on this trade right now with the potential of making quite a bit more. I mean, this is my demand area. I'm looking for the price to return to. There may be a couple of places along the way where we had a little base just before this last move up where we could expect a bounce. Okay. Which red box are you referring to, Jen? The red box up here is just to illustrate that that's my risk on the trade. All right, it's looking pretty good. So far, we got a 2-to-1. What our risk is. NASDAQ, are we helping here? NASDAQ still has not produced. All right, potentially got one here. We're gonna have to wait for that next candle to complete. Then retest. Now the NASDAQ is still gonna have some additional risk, so I'm gonna drop this down to 1 micro and splice my way into it. Should have given us a good entry. Because I still have to give it the risk that it needs. And if that risk, like on gold, is outside of your trade plan, and you can't even take one contract, then you pass and you wait for the next one. Okay, so I'm going to jump in with 1 micro, selling at the market, and my stop loss will be up at the high of the day. $5.49. Looking for a little more commitment from the stocks. And we still have 28 minutes till the banks and institutions complete their order flow.
Order filled.
Okay, using 1 micro, we have $131 worth of risk. All right, so let's put out our final quiz question because we're running a little bit late. Okay. Our third and final question for the $25,000 evaluation account for futures. Third question. What is one way that the market institution invites people to engage in join their community? Through physically weekly meetups, by registering on the website and joining our Discord group, exclusive via printed newsletter and mail to members. What's one way that the market institution invites people to engage in our community? A, through physical weekly meetups. B, by registering on our website and joining the Discord. Or C, exclusive printed newsletters. All right, so put your answer in the chat on the YouTube channel. And the first one there will get the evaluation. I'll give us a couple more minutes, as long as everybody's hanging out here. Now we gotta wait for another one to add on to that. Tesla's the only one that's leading this market down. The other stocks are still holding up pretty tight. All right, congratulations, Ken. Grabbing that $25,000 account, revaluation account from Elite Trader Funding. So huge congratulations to all of our winners. We'll contact you right after the live, the room here as we wrap up to get your evaluation account and help you get set up. For everyone else, thank you for joining and being part of our trading community. And don't forget to hit that like and share button and join us again next Friday. If you want to join us more, you can go out to the website and see how to do that. All right. All right, let's just double check on our positions that we took. Yes, reach out to the team. They'll get you set up. Okay. There's a comment in the Zoom. Okay, so our S&P is still underway. It looks like we might be creating another one. Okay, and our crude oil still hanging at break even. All right. Well, for the rest of you, I'll see you over in the in the Discord room in our voice channel. Wish everybody a good trading day. Remember, the banks and institutions are still going to be finishing their order flow. Oh boy, look at that Russell. Beautiful trade on Russell. Sometimes just watching the NASDAQ and the S&P, it's missing some really good ones. But anyways, I'll see you over in the Discord. Happy Friday, everybody. And thanks for joining us again. AS, please reach out to the team at admin at the Market Institution, and they'll get you taken care of. Okay? All right. Have a great day, everybody. I'll see you over in the Discord room.